More across the markets now. Tony Sycamore from IG joining me. Gosh, what a difference a week makes. Talking DeepSeek last week, now we're talking tariffs. We knew they were coming, but still there is a lot of market gyrations.
Yeah, absolutely. It's been an eventful start to the year, and it's been another eventful week, and we're only halfway through it, Jules. But a lot going on, and obviously tariffs have been front and centre this week. There was obviously a little bit of risk aversion in the markets yesterday afternoon as we saw China retaliate to US tariffs, that 10% new tariff that was across Chinese goods. But digging down, the devil is always in the detail, as we know. We found that the retaliatory tariffs were certainly not, they were very modest compared to what the US had instigated. So we're talking about around $20 billion worth of goods that there's going to be tariffs on from China, as opposed to $450 billion in terms of what US is implementing on Chinese goods. What that meant for markets, well, bolstered by some good earnings reports and obviously some cooler economic data, we did see US stock markets rebound overnight. Just how long that rebound is going to last is open to debate. We saw Alphabet report after the market, and its share price has fallen by over 7%. But the real devil in the detail again there is they're forecasting CapEx there of $75 billion in 2025, which is up 42% from this time last year. US equity futures are down, and it really keeps this correction in the NASDAQ we've been seeing unfold over the past 6 to 8 weeks. I expect that to continue. Now, with the correction, we just don't know how long it's going to last. But we can start to look at some important technical levels.
Yeah, let's have a look at the NASDAQ there, because you mentioned Alphabet coming through after the bell, and it's worth noting that the likes of XYZ on our market down 5.4%. So what are the technicals showing here?
Right, well, we entered that correction from the 22,133 high back in mid-December. It's been going on now for about 6 to 8 weeks, as I mentioned. I don't think it's over. So far, it's been rather resilient, just trading sideways, but I think we still need to see a bit of a flush lower. We know that investors are still overweight US tech stocks. I feel like there's a little bit of room to the downside, potentially into that area, which you can see there. The orange line is the 200-day moving average, and the uptrend coming back all the way until December 22. So coming in around or just below 20,000, I suspect we see the NASDAQ, given the way that markets are unfolding, just a little bit more risk off into probably the next 2 or 3 months, brings it back down towards that band of support I'm talking about, and then potentially we decide whether we're going to rebound to new highs or take a look lower. And of course, if we were to break the 200-day moving average and the uptrend, that would be a very negative development.
All right, what for the ASX 200, which of course was looking good yesterday until the retaliatory tariff information, which sent the market pretty flatline, but we're rebounding today.
Yeah, we're going to refer to the chart we've looked at a number of times, Jules. It has been in place for over 12 months, this bullish trend channel. Last week, it pushed up towards the top of that trend channel, which is currently coming in around 86.60-ish. Didn't quite get there. Obviously, the news on Monday gave it a pretty solid knock lower. But for me, providing it holds above support around 83.80 to 83.60, that's on a sustained basis, not just a little bit below there. So it'd need to be a closing and potentially follow through the next day. If it breaks below there, then you could probably start to think, well, we've seen a medium-term high up around that 85.66 high from last week. Until then, I think you have to allow it to push higher to have a good look at the top of that trend channel. I don't expect it to break. I mean, this has been a long-standing trend in place for the ASX 200. We've got an election coming up. We've got RBA rate cuts coming up. I think there's a bit of uncertainty out there in terms of the way this trade war evolves and what it means for the Australian economy. So again, not looking for it to rip higher through the top of that trend channel, but at this point of time, looking for a test of 86.60.
All right, what about the Aussie dollar, which earlier in the week hit a near 5-year low, the lowest since the pandemic on the tariff implications?
And didn't leave a very solid footprint in the sand down there. It hit that 68.70 low and it springboarded out of there. There's a little bit of a pullback yesterday around 4 p.m. when there was the initial headlines about Chinese retaliatory tariffs. But after learning that they're obviously a little bit more modest than everybody were more modest than expected or feared, it's now pushing up towards that downtrend from that 69.42 high we saw back September last year. Aussie dollar fell about 13 to 14% from that high. It wouldn't be a surprise that if you could get above that trend channel resistance and above a band of resistance around 63.50 to 63.70, that would probably suggest we have got a medium-term low in place. But at this point in time, the jury's out and we need to see more work to the upside there.
All right, well, of course, we all want to hide when we don't know what to do, and gold is always the beneficiary of that. When do we see 3,000? What are the technicals showing us here?
Yeah, it's not too far away, I don't think. I mean, going back to the technicals again, very solid trend channel, been in place for a long time in gold. Broke above a double high around 27.90 about a week and a half ago, and we thought the next upside level would be 28.50. It's just about there now. If it can motor on through 28.50, potentially it's a little bit overbought in the short term, so a pullback potentially wouldn't be a bad thing back towards maybe 2800. But after that, and providing it holds that 28 to 27.90 support zone, then the top of that trend channel, which we're referring to again, comes in around 3,000, Jules, so it's not out of the question at all.
All right, it certainly seems like it's going to get there sooner rather than later. Oil, meanwhile, I mean, we're also hearing President Trump and Benjamin Netanyahu talking at the moment, but there's always going to be a lot of volatility in the oil market as we try to, I guess, reassess the overall global picture. Yeah,
there has been a lot of headlines over the last 24 hours there, and again, we see another almost a capitulation type low in crude oil down to that 70.67 low. I've been looking for it to pull back into the bottom band of this trend channel support it's been trading in. Comes in $70 to 68, so almost got to there and then springboarded higher. I suspect if we can get above $75 to 75.20, which was the high we saw last week, the orange line again, the 200-day moving average, gets above there, then we can probably rotate up towards the top of that trend channel. But if we just look and step aside, crude oil is trading within a really generous range here. It's trading sideways. So providing you can avoid the tape bombs in the middle of that range, you're probably going to be okay. But towards the bottom of that trend channel, we would probably be looking to be buyer. Up towards the top of that trend channel, well, we know what to do when it gets up there.
Absolutely. What about digital gold? I mean, the FOMO trade, but then it sort of faltered a little bit.
Yeah, it has. I mean, we talked about the trade war in 2018 and Bitcoin actually fell 75%. Now, things were a little bit different back then. There was regulatory issues. There wasn't that widespread adoption, but certainly there was some ructions in the crypto market. We saw around $2.3 billion worth of leverage positions exited on Monday. And then, of course, it springboarded back up above some uptrend support there. I'm not convinced yet one way or the other in terms of that 109,356 high. It's still in a position where it can retest and break that. But if we were to see the low from earlier this week, around 91,000, and the previous low around 89,000 break, then I think that probably solidifies the idea that 109,000 becomes a medium-term high and Bitcoin can trade back towards that 200-day moving average. Until then, while it holds above that 91,000 support, allow the upside to evolve.